Hello and welcome back to another video. Today we're going to be looking at high yield savings accounts and I'm going to be fully explaining them. Now by the end of this video you're going to understand everything you need to know about high yield savings accounts, including how they work, all the pros and cons that come with these accounts, and I'll also be discussing some of the highest paying savings accounts that are out there. So let's start with an introduction. A high yield savings account is a type of savings account that offers a higher interest rate compared to a standard savings account. These accounts can offer interest rates that are 10 to 12 times the national average of a regular savings account. The way high yield savings accounts work is simple. You deposit money into the account, this money accrues interest, causing your balance to grow. The interest rate is set by the account provider, which is why it's recommended to shop around to find the best rate. When you need to make a withdrawal, you contact the provider and follow their instructions. However, it's important to note that you may face charges if you withdraw the money before your notice period is up. Most high yield savings accounts require a minimum deposit and the amount varies depending on the provider. Additionally, most savings accounts have a maximum amount you're allowed to save in order to earn the advertised interest rate. This limit can be quite high, with many accounts accepting deposits of up to 1 million or more. So what sort of interest rates do they actually offer? Interest rates in the context of savings accounts refer to the amount of money that the bank or financial institution pays you for keeping that money deposited in your account over a certain period of time. This is typically expressed as an annual percentage yield, also known as APY, or annual equivalent rate, which is AER, which represents the actual annual return of your savings, taking into account the effect of compounding interest. High yield savings accounts offer significantly higher interest rates compared to regular savings accounts. While some traditional savings accounts, particularly those at large national banks, earn rates as low as 0.01% APY, high yield accounts earn many times more. Currently, rates at the best high yield accounts earn around 5% APY. So what are the pros of using a high yield savings account? To start with, obviously there's a higher interest. High yield savings accounts offer significantly higher interest rates compared to regular savings accounts. This means that your money grows faster and you earn more over time. There's also safety and security. Your deposits in high yield savings accounts are typically insured up to a certain limit by the Federal Deposit Insurance Corporation, also known as the FDIC in the US, or the Financial Service Compensation Scheme, which is the FSCS in the UK, providing a level of security for your money. There's also accessibility and flexibility. High yield savings accounts usually come with the ability to withdraw or deposit funds at any time, giving you easy access to your money. Some accounts may also come with check writing privileges or a debit card for even more flexibility. So now on to some of the cons. To start with, there's limited transactions. High yield savings accounts often limit the number of free withdrawals or transfers you can make each month. If you exceed this limit, you may be charged a fee. There could also be minimum balance requirements. Some savings accounts require you to maintain a minimum balance to earn the advertised interest rate. If your balance falls below this minimum, you may earn a lower rate or incur a fee. And finally, interest rate variability. The interest rates on high yield savings accounts can change. If the market interest rates fall, the interest rate on your account may also decrease, reducing the amount of interest that you earn. And now I'm going to discuss some of the highest APY savings accounts. To start with, we have Millie, and their savings account earns a whopping 5.5% APY. And in order to claim this rate, you'll first need to download their app on either the App Store or Play Store. And from there, you'll be able to make an account and start using their savings account for that 5.5% APY. Next up, we have UFB Direct, and this is another high APY savings account. And their APY is actually at 5.25% right now. So it's a little bit lower than Millie. However, this is still very high when compared to traditional savings accounts. In order to open an account with UFB, you can head over to their website and come onto the savings account page. And then you can scroll down and open an account down here. And then finally, we have Bread Savings, and they have an APY of 5.15%. You can read a bit more about it on their website. As you can see, you need just $100 minimum opening deposit, so you don't need much at all to get an account open. And there's also no hidden fees, so that you can save more. In order to open an account, you want to come onto this page and simply click this button here. So this has been my video fully explaining how high yield savings accounts work, as well as discussing all the pros and cons, as well as these savings accounts which you can sign up for today to get over 5% APY. So I hope you found this video helpful, and if you did, please comment down below to say it helped you out, and like and subscribe for more content like this. Thanks for watching.